What's going on, guys? It's Matthew from Labor to Wealth, and I'm currently coming at you guys at about 11:30, I think. Yeah, about 11:30. I recorded this video earlier today. I was kind of curious about the DXY, and I wanted to kind of go through my price action analysis for the DXY on TradingView, just to kind of give you guys my outlook on what we could be doing with the traditional market and what the dollar kind of leads me to assume over the next month, next 2 months, next 3 months. We kicked off October 4th. We kicked off quarter four of this year, and quarter four usually we always have kind of like a little quarter four rally right before quarter one sell-offs. I mean, that's kind of what I've been learning over the past couple years of trading, and then from gaining experience from as many people and as many traders as I possibly can. They all say the same thing as well. Quarter four usually always has pretty good, decent rallies, and then quarter one usually always has sell-offs. And so the DXY is kind of the contradiction to that. So the DXY actually ends up trailing down for quarter one, for quarter four, and usually ends up trailing up for quarter one, because as the traditional markets lose their strength as in assets, the DXY goes up and trails up, and we're at the same monetary place that we have been. I mean, the Fed continues to keep raising interest rates. They're not going to stop that anytime soon. We're only at 3.75 or 4% interest rates right now, and they want to get anywhere from a minimum rate to 5 to 7% they're talking about now. So you can see we're not anywhere close to being done with this little bear market yet. We're kind of just like me and Kobe have been saying, we're kind of in the beginning, middle, and I think 2023 will probably the entire year will kind of be bearish, just like 2022 was for us in the markets. But as you can see, all the little gold circles that I was drawing in the background of this chart is all previous support ranges or previous price history of the DXY. So you can see this 106 level has been hit quite a few times, like very, very frequently over the past 40 years, okay? And we're at a place right now of where this little green box that I have we got above it, we broke above it. I forgot exactly what month. As soon as we zoom in, I'll be able to tell exactly what month we actually broke above it. It looks like it was about May. Let me see. May or June. It looks like June, beginning of July. So June, the beginning of July, we broke above it, and you can see we got our little head above, went back down, the green box, we held support, and we blasted straight through. So you could see the beginning of quarter four, we fell straight through the 4-hour 200, and we have not came back to retest it, okay? And then what's leading me to assume the next couple of weeks for the DXY is kind of going to be neutral and kind of bearish, is just because the compression with the traditional markets and with BTC, they both look like they want to go up or at least remain neutral and get as much positive momentum as they possibly can to end the year as neutral as possible instead of being as negative as this entire bearish year has been. I think the traditional markets as well as crypto is going to want some type of relief. Crypto's not going to get an insane relief, but the traditional markets might get a decent size relief. But with the DXY eyeballing, it's eyeballing its way up now. I feel like the majority of the downside move for the DXY has already been seen, because the beginning of quarter four started off with that huge candle wick down for the month of November. We had the doji green, which first closed below the 4-hour 200. But that was in the month of October. September is when we started playing around with it and actually getting below it. So you can see the past 3 months we have been underneath the 4-hour 200, and we actually have not gotten to a point of where we want to come back up, bottom out just yet, and go back up. But you can see we're bottomed out on the weekly. So the bottom out on the weekly RSI tells me we're kind of getting near a little short-term bottom. How much of a bottom though? I mean, we usually see the most explosive downward moves once we get to the bottom of the range, right? And the one thing that's telling me that we really might see a sustained bounce here and we might actually see the DXY go back up to the 110 range is look at where we're at with the monthly. So majority of the time when we do start getting the fall from the monthly and we do start getting falls from the weekly, we don't just automatically continue to keep falling and falling and falling and falling. We have support range bounces with the RSI. And usually this green box that I just put in on the screen right now, this is usually where we get a decent bounce from. It's the top of the neutral zone. So the top of the neutral zone of the RSI is a common bounce point. So for me, if I know that, right, I'm a trader, I know that. I have to use that into one of my edges in how to play the market. So how I'm playing the market right now is I'm really diving into the DXY and I'm trying to get a really good outlook on the next month, the next 2 months. So the next month for me tells me that the DXY wants to remain neutral, okay? And the DXY wants to, not go too much down, not go too fast to the upside. It wants to remain neutral. So that tells me that gives room for the traditional markets to grow. Okay, the traditional markets don't have any downward pressure right now. It's Q4. It's usually bullish. DXY is not moving, so that tells me that we have a good indication of the DXY remaining neutral. We don't got any bearishness in the news just yet until pretty much Q1 of next year. So all the bearish news that we're going to get in the markets is pretty much already factored in. So that tells me we're getting to a point of where the traditional markets want to roll over because we've got aggressive moves. However, the DXY is still remaining neutral at its bottom, and we might continue to keep playing in this little golden circle for the next 3 weeks or for the next 2 weeks to a month, which is what I see us playing out in. And you can see this little rounded bottom kind of thing that I'm doing now. That puts us all the way up until the end of December. Okay, so if we continue to keep playing out and we kind of bottom and kind of playing within this green box range, it can put us all the way out until, the beginning of January, which, what is January, guys? Beginning of Q1. Come on. It's crazy how much, confluence we have with these quarters every single year. Like, as long as you start to, the more that you start to understand that the market flows and price action moves in specific ways, price action doesn't move in a trillion different ways, guys. They only move in like a handful of different ways. So the more that you get in tune with the ways the traditional market and with the crypto markets move, the better trader that you're going to become. So this little path that I'm doing right now is my potential of what we're going to do with the DXY over the next 2 or 3 weeks, maybe even a month. The DXY, I could see us remaining neutral and slowly being like suppressing our way down, right? And again, like I explained a couple videos ago, or maybe it is the previous video, price suppression. So the DXY is kind of the opposite of that. DXY can compress too, but the DXY is being suppressed. And I believe that the little resistance levels that it's forming on the daily and on the 4-hour, all the small resistance levels for the DXY, as it continues to keep building neutrality over the next couple weeks, it's going to basically suppress that explosion, right? And that explosion, I think, is going to make it go right back to the 4-hour 200, test that line again, and that's going to be our edge. So that's the edge that I'm playing to, and I'm looking at Q1 of the beginning of Q1 next year. Rate probably late January, early February. I could see the DXY coming back up to that 110 range, maybe even getting above that, but we shall see. And with the Dow Jones, you can actually see too. I'm actually going to do a price path for the Dow Jones, just to kind of show you guys what the DXY being neutral could do for the Dow Jones. The Dow Jones got, pretty look at that green move that it has for the weekly. I mean, it's been going up like crazy. Usually when you see things like this, I mean, you kind of want to sell into it, but because the neutrality in the DXY, which gives the traditional markets a little bit more room to grow, and with the weekly only being at about 95%, we could even get an accentuation on the RSI for the weekly on the Dow Jones and get back up to that 35.5, 36K range, maybe. I know that sounds insane, but we might actually get up there with the Dow. And again, the circle that I have right now for the that I'm drawing in right now, that's the bearish side, and that's the neutral side of the DXY, just kind of like bubbling up, gearing up for Q1, right? So that circle I want you to keep an eye on. So that circle that I just drawn in, that's my neutrality with the DXY, which neutrality in the DXY tells me that there's room for growth with the Dow Jones. So this golden circle that I have going right now. And this box that I'm actually about to do as well, or this path, I guess I should say, is this could be the path that we have peaking at the end of December, leading into January. So we might see like a maybe like the 20th of December through the 26th of December, getting that peak, which is I believe that peak of that line that I have, and that's within that gold circle as well, and then start trailing down, right? And then that bottom, right? This little bottom coming back down to the 4-hour 200 and retesting that. This would be the equivalent on the DXY hitting what, guys? Hitting what? The golden circle right there, that golden circle. Okay, so that would be confluence two, and it might give, you know, at that point in time we'd be leading into quarter two, and that would be what, guys? Quarter two usually does what? Good things. So the traditional market might get a little bounce and a rally up in quarter two of next year. Wow, crazy. But it's insane the way everything kind of correlates with one another. But I'm gonna actually go ahead and type in right now what these two probabilities for me would be. So it looks like we could see a rollover. However, even with the rollover being said, for the immediate term, right? For I believe we're on the DXY. It looks like we could see a rollover quarter one of 2023. And I should have said at the end of quarter one, because quarter one is going to be a rollover for the traditional markets. I definitely agree with that. But we won't see really a rollover, I believe, until the middle to late quarter one of 2023 with the DXY. So the DXY, this is what leads me to assume too, it depends on how low the Dow might go in this. I'm actually going to put this or statement in here. If we can get a peak above the 4-hour 200 on this next move up, because actually if we even sustain where we're at right now with the lows of the DXY, that's actually still a structured higher low, and we could, for the weekly, still higher up, we could get a sustained bounce even on the monthly on the RSI too. We could get back above, maybe even push up above 110 again for the DXY, with inflation still kind of being a problem, with monetary policy still continue to keep getting raised with interest rate hikes. We could see the DXY get back above that 110 range and maybe even float up to 112, 114, 115 again, do that double top of what we just seen happen quarter three, at the end of quarter three of 2022. So these are the top two probabilities for me for the DXY. We remain neutral and we get a bounce at the beginning of quarter one of next year. And then the edge in that scenario would be is to see how we interact with the 4-hour 200 on the DXY. Okay, and then once we get the confirmation on the actual move, and we see whether it's going to be a sustained bounce and we're actually going to get above the 4-hour 200 and actually float above and go do a double top scenario again at around 115, maybe even get a little bit above that, or we hit our head on the 4-hour 200 and we trail back down. And so with the Dow Jones, as we jump over to this chart again, if we float up continuously on the DXY at that point in time, we're going to get below that green line, which is 31K, and we're going to float back down to the lows that we've seen, which I believe was right around August to September. Yeah, August, September time, right before we got that quarter four bounce for the traditional markets, which was October 4th, which was when the quarter four began. And you can see since October, we got that huge freaking green move up. But we might actually come right back down in the second scenario if the DXY can get above that 110 range, you get above its 4-hour 200. We will definitely see the Dow bleed. And how much would the Dow bleed? That's all dependent on the markets and all dependent on the DXY. We could see Dow come all the way back down to 27, which would be its pre-market highs right before COVID and right after COVID, the support ranges. But again, guys, I just wanted to kind of go over price action analysis for the DXY and the Dow Jones, just to kind of give you guys, my mindset on how you find edges in the market. So for me, how I find edges in the market is first and foremost, I look at the DXY. The DXY is what leads the traditional markets to me. Okay. So when I look at the DXY is telling me whether the markets are either bullish or bearish. Okay. And the bullish or bearishness, I then take over the Dow Jones. The Dow Jones to me is the leading indicator for the traditional markets. Okay. And I love the XPX. I love DX. I love XPX. I love NASDAQ. I love all that too. But for me, my leading indicator is the US 30. Always, like, to me, it's my bread and butter. So when I know what the Dow is doing, I know what the US 30 is doing, I know what the markets are doing, I have a really good understanding of what could happen in the markets, and that gives me the best edge to play the markets and manipulate the markets and the best strategy that I can come up with. So yeah, guys, I hope this video was helpful for you guys. I hope it was beneficial. Hope you guys learned something from this. Hope you guys were able to dive into my mind and see how, the mindset of a trader works sometimes. Stay humble, stay hungry, stay disciplined, guys. Peace.